Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassat. Today is Thursday, October 14th, 2010. Let's start with some news in Asia, where we had the US dollar declining overnight after Singapore tightened its monetary policy, inspiring confidence in Asian economic growth. The move by the Monetary Authority of Singapore, which involved widening as well as raising the trading band for the Singapore dollar, indicated Asian economies are now strong enough to tolerate monetary tightening, while the US dollar languishes under prospects for more easing by the Federal Reserve. Singapore uses the currency rather than a benchmark interest rate as its main tool to manage inflation, and Singapore's inflation has accelerated to an 18-month high of 3.3% in August. The central bank has forecast price gains may quicken to about 4% by the end of 2010, and we have seen Singapore's GDP rise a record 18.3% in the first half of 2010. In this way, Singapore is acting as a bellwether for the rest of the Asian economies. Let's take a look at some currency pairs. First, let's start with our major, the euro dollar. We had talked about testing the 1.40 area in yesterday's video recap. We see that was the third time that we have broached that level, and we had said that the fundamentals favor the euro and that the break of that level was imminent. So as we can see, in overnight trading following that Singapore news, we did move above both 1.40 and our highs from last week at 1.4030, reaching as high as 1.4121 before we saw the US dollar regaining some of those losses and perhaps some profit taking above the 1.41 level. So with Asia in a bit of a tightening mode, the US in super currency debasement mode, and the ECB in a status quo mode, the US dollar is the weakling right now and it's being sold off. Now, we did see the US dollar regaining some of its losses in the New York morning trading session, and we do see even currently at around 11:45 a.m. Eastern, the euro dollar moving to perhaps the euro dollar pair moving to perhaps retest this old level of resistance as support. Looking at the dollar-yen pair, we see the US dollar sold here as well as we punctured our old support at 81.40, which was our low from the beginning of the week, just at the start of the week. We fell all the way to 80.88 before we saw the greenback rebounding a bit, similar to what we saw in the euro-dollar pair. Here too, we may be looking to just retest an old level of support as resistance before the pair continues its downward slide. And as of this point, still we do not see the Bank of Japan anywhere in terms of intervention, so we may look to test the all-time low at around 79.90, perhaps before we do see some kind of move by the Bank of Japan. Now, if we zoom this pair out, we see that we are pretty far below the level at which the Bank of Japan intervened on September 15th, which was the 82.88 level. So again, after the rather strong move in overnight trading, we probably see traders being a bit cautious, and so pairing or profit taking following this dollar-yen short. Taking a look at one of our other major currency pairs, the pound dollar, we see here too a move to sell the US dollar. We see the pair moving above its two most recent levels of resistance at 1.5960 as well as 1.6020. Now we reached as much as 1.6065 before here too we saw the greenback pairing some of its earlier losses. Now in yesterday's video we said that we were sort of unclear about the path of this pair as we had been in very sideways trading, but now we start to see a bit of a upward sloping channel forming in this pair. If I draw a second trend line connecting our recent highs in this pair, so that could favor the pound going forward, though we are at the sort of top part of that channel if we in fact are in one, so we may see some correction before we have another leg in favor of the pound. Now, before we take a look at some more highlights, including our commodity currency pairs, let's take a look at the US data from today. We had three reports, so let's start with producer prices, which rose by 0.4% in the month of September, pushed up mainly by food and energy prices. The cost of food increased 1.2% from a month earlier, the most since March, while energy prices increased by 0.5%, led by liquefied petroleum gas. Taking those two volatile goods out of the equation, the core PPI rose a tepid 0.1%, matching the figure in August, showing that underlying inflation remains pretty low. In a second report, we saw the number of Americans filing first-time applications for unemployment benefits unexpectedly increasing last week, indicating the U.S. job market is struggling to mend. Jobless claims rose by 13,000 to 462,000 in the week ended October 9th, but the total number of people on unemployment insurance rolls did decrease to the lowest level since November of 2008, while those getting extended benefits also declined. Taking a look at the chart to the right, we see following an increase in jobless claims during August, that jobless claims figure has moved back down, but remained stuck in this range that we've been in during most of 2010. In our third report, we saw the U.S. trade deficit widen more than forecast in August, as we saw growing demand for autos and capital equipment made overseas, which swamped a smaller gain in exports. The gap widened 8.8% to $46.3 billion, as imports rose 2.1%, while exports increased only 0.2%. A couple of points to take away from this release. One is that the gain in purchases of goods made overseas is a positive signal that American companies are continuing to invest in new equipment and rebuilding inventories, and that U.S. consumers have extra money to spend. However, those consumers are buying foreign goods, which means that the trade report looks set to rob the U.S. of some growth in third quarter GDP figures. Moving from the US to Canada, we saw Canada's trade deficit narrow at a sharper than expected pace in August, as the value of exports rose for the first time in 3 months, while import prices declined. The trade deficit was 1.35 billion Canadian dollars, down from 2.55 billion Canadian dollars in July, which was actually a record deficit for Canada. The value of exports rose 3.1%, while imports fell 0.5%, the third decline in the past 5 months. Looking at the US dollar Canadian dollar pair, we see that we followed up yesterday's session, which we came close to testing the parity level, with another run in favor of the Canadian dollar, pushing below the 1-to-1 level, moving as low as 0.9978, though we did see the greenback bounce back prior to the start of New York trading, and during the early New York trading session we moved as high as 1.0050, though this looks more just a correction to the recent downswing we've seen over the last 3 trading sessions. Yesterday we had talked about the move below 1.0050 as an important support level that we broke our lows from last week, and in the Monday we had seen this sort of triangle pattern setting up that we had broke also. So the signs had been there for the Canadian dollar to continue to gain in today's session. So similar to the euro and the pound that I've mentioned, this looks more to be a correction or profit taking, and we may be testing the old level of support now as resistance in this pair. So this could be perhaps a point for traders that are bullish on the Canadian dollar to reload and sell this pair some more. If we zoom this pair out a little bit, we could also draw a downward sloping resistance trend line connecting our recent lows in this pair, forming a bit of a downward sloping channel similar to what we had seen in the pound dollar. So that's a big difference from the sideways action we had seen in this pair early in the middle of September. So definitely see a shift in the trend in this pair, and we'll see if it continues into tomorrow's session and into the next few weeks. Yesterday we also took a look at the Australian dollar US dollar pair. We had mentioned that it had been forming higher lows in this pair, as well as testing this resistance level 0.99, and looked set to perhaps break that, and in fact we did in the overnight trading session move above that resistance level, climbing to as high as 0.9992, just 8 pips below the parity level, so that's a record high in this pair. So following that we did see some profit taking, and again we retested an old level of resistance here now as support, and so we did find some bounce back to the Aussie following that test of 0.9920 in this pair. So again, the fundamentals remain firmly in favor of the Australian dollar as well as the Canadian dollar, as they should continue to profit from higher commodity prices, as well as general better economic growth. It's the US dollar that's the laggard, and with the speculation of quantitative easing, it will continue to weaken in the weeks to come. So that's a roundup of our key pairs and fundamentals. Now let's take a look at the upcoming fundamental docket. So the data is pretty limited in the overnight trading session. We get revised figures from industrial production from Japan, as well as the final version of consumer prices from the Eurozone, with really the trade balance being the only new release. But in tomorrow's North American session, we have a slew of releases, which we start things off with a speech by Fed Chairman Bernanke titled Monetary Policy Objectives and Tools in a Low Inflation Environment. So traders will be looking for clues as to the chairman's thoughts on quantitative easing and monetary policy going forward. In addition to that, we have data on consumer prices, retail sales, consumer confidence, a look at manufacturing activity in the New York region, as well as the government's budget deficit for September. So we definitely have a good amount of data to look through in terms of the state of the US economy heading into the weekend. So that could determine how the dollar performs following the weekend break. And so that'll do it for today's video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.